Stocks rebound on target inflation perspective. Bond yields slip. New York World stocks rebounded on Tuesday at the belief inflation may be peaking after Target Corp. NYSE, TGT, stated it would offer deep reductions to clean stock as customers alternate their shopping habits, even as Treasury yields fell after a wonder rate hike in Australia. Target, a major retail chain, cut its quarterly earnings margin forecast and said it'd mark down prices within the 2D region in a wonder revision that sent shares of the store 2.31% decrease. Target, along with Walmart, NYSE, WMT, had suggested a mile steeper than expected drop in quarterly profit in May, roiling the retail industry. The retail zone of the Pan-European Stocks Index on Tuesday closed down 0.94%. But Target's caution changed into visible as having a fine effect on inflation and could help the Federal Reserve and different principal banks fight the pointy upward thrust in client prices without sharply boosting hobby charges and sparking a deep slowdown. Target cuts both approaches. On the one hand, manifestly it's terrible information for Target. But on the other, it's one of the first huge indicators that inflation can be peaking, said Rick Meckler, an associate at Cherry Lane Investments. Of path, this is the situation of a soft landing. That we improve charges, that it reins in inflation some, but it doesn't forestall the economic system, he stated. The MSCI's benchmark for global shares won 0.40%, whilst the Stoxx 600 index fell 0.28% earlier than the idea that Target aids the inflation fight took keep. Anthony Saglimbene, international market strategist at Ameriprise Financial (NYSE), AMP, said Target's statement advised greater agencies will begin to lay the basis for reduced profits. We could see in profits recession this 12 months without seeing an economic recession, which would imply we would get zero profits growth, he said. That's a headwind for stocks. On Wall Street, the Dow Jones Industrial Average rose 0.8%, the S&P 500 gained 0.95% and the Nasdaq Composite delivered 0.94%. The Reserve Bank of Australia overnight raised quotes by way of 50 foundation points, the maximum in 22 years, and flagged greater tightening in advance because it actions to restrain inflation. Later this week, the European Central Bank is predicted to start a tightening cycle. Central bankers are gambling catch-up with the fact that inflation could be very, very excessive and that they want to kind of tamp it down via higher quotes, Saglimbene said. The yield on 10-year Treasury notes fell 5.3 basis factors to 2.985%, underneath the important thing 3% threshold ahead of statistics on Friday anticipated to expose still excessive U.S. inflation. Excessive studying might company up expectancies that the Fed should raise costs greater than the expected 50 foundation factors increase at its upcoming coverage meeting subsequent week and in July. In Europe, benchmark 10-year German Bund yields also dipped 1.6 basis factors but held near Monday's highs ahead of the ECB meeting on Thursday. They ultimately traded at 1.303%. British Prime Minister Boris Johnson survived a no-confidence vote amongst his Conservative Party's lawmakers on Monday, however the thin margin of victory spurred communique of a circulate to update him, hitting sterling and gilts. 10-year gilt yields touched a 7-year excessive at 2.279% before finishing nearly flat at the day. In forex markets, the greenback index fell 0.146%, with the euro up 0.09% to $1.0704 on expectancies of a hawkish ECB tilt. The U.S. Forex rose to its maximum on the grounds that 2002 towards the yen and became last up 0.57% after the Bank of Japan governor promised support for the economy and clean monetary coverage even as fees start to rise. Sterling changed into ultimate buying and selling at $1.2592, up 0.49% at the day. The Australian dollar gained as tons as 0.76% just after the supersized RBA charge hike, however quickly shed profits to exchange flat on the day. Oil expenses received about 1%, with U.S. crude remaining at a 13-week excessive, on supply worries, consisting of the dearth of a nuclear deal with Iran and the prospect of better call for after China relaxes lockdowns imposed to manipulate the coronavirus pandemic. U.S. crude futures rose 91 cents to settle at $119.41 a barrel, while Brent settled up $1.06 at $120.57. Gold rose because the greenback gave up some profits, whilst investors placed for U.S. inflation readings later this week for cues on the Fed's hobby price hike trajectory. U.S. gold futures settled 0.5% better at $1,852.10 an oz.